everyone. I'm just doing a generic video now on the market conditions and what we can expect from the market in the next few months and weeks going forward. April, traditionally, now we're at the end of the financial year. All the NAV balancing, all the markers over there are sort of over. Now we'll have a lot of results coming in of a lot of companies. So based on those results, based on how the quarter went, those markers are going to drive the market from here on out. So if results are good, we can expect some good upside, and the wider markets will go up along with them in the expectation of good results of some key stocks. May and June, typically, like if you just go to the chart, I will come to the chart also, you would see like a lot of balancing is going on. People are on holiday. People are not, as productive in terms of the stock market goes. It's typically a holiday month, May, typically. So May and June, you don't see much. And this is reflected on the charts as well. Let's get into it. So here we just see the chart of Nifty. You see there was a rally up here till 2021. Then if you go to 2021, if you see the March, like to May, June time frame, you would see there's a lot of consolidation happening here. And even in July, it went up a little bit, but then started consolidating. Like, let me just draw this channel here. So now you can see clearly how this channel is marked out, and Nifty was basically oscillating in this channel. Okay, let me move this. Let me draw another one here. If you see this channel right here, you would see these two are longer periods of consolidation. And this is what I was talking about, where May, June, July, typically you have like a lot of consolidation going on. Obviously, if the results of the constituents of Nifty 50 stocks are great, then we have that rally start to resume. And typically, like post July, August onward, August to Jan is typically a very good period as stocks start to rally. And a lot of productive work being done. Here we have the daily chart of Nifty. What I think is actually going to happen over the next week or so is we might have some sort of an upside going forward. But okay, so here we have a little better view. Sorry about that. Like that view was too constrained and too narrow. But what we can see here, the fact that it fell from somewhere right here, 18,400, it's gone down to 15,600. Today we are at 17,700, kind of the first week of April. I think breaking out here at the top is going to be a little difficult. If we just mark this level right here, around 18,600 for new all-time highs. That is expected to happen at some point, but what I think is April will be good upside. And then when May starts to creep in, and as the results have come and gone and things are out, then the market will start really stagnating. So to actually break this range of 18,500, it's going to require a lot of effort, and the results would have to really be great. Now time will tell, and as and when the results come in April, we'll get to know whether this is actually happening or not. But then post that, May, June, July, expect some sort of stagnation to happen. And also just keep in mind that, rates are going really high. There is inflation happening. So there is a correction expected at some point in time, not probably in the near term of the next few months, but it'll happen and it'll happen suddenly. The key thing is to not panic, to understand that it's just a short-term blip. Because if you see the companies and the constituents, the Nifty 50 companies, even some of the stocks we've covered in these videos, like Vedanta, Brightcom Group, you see the businesses are doing well. So there will be these kind of outliers. There will be stocks that will continue to do well. So as long as you're picking stocks well with the right metrics, with good ratios, you should be okay. So even if there's a correction of like 10, 15, 20%, just be prepared that you have the capital and you have the resources to take advantage of that. If there are some suspect stocks you're in, yes, it's a definitely good time to like exit those stocks. But in the fundamentally strong stocks, there would be no problem. Like you would be safe. And they're really good examples, like the Vedanta video and the case study I had done. You can just see how the dividends are so awesome from their stock. It's around 9 or 10% dividend yield. That's just amazing. And that doesn't even account for your capital appreciation in the stock. So just imagine getting 10% back. Your FD returns are like 5 to 6%. No fixed income can give you that much income back. So if your stock is giving you 10, 11% back at the current rate, and these dividend rates are expected to increase, these are the kind of calls that you have to take. And these are the kind of positions you have to study and stay invested for the longer term. Again, as with the regular disclaimer that this is all education, it's not financial advice. So please study the stocks carefully if you plan to invest in those. As far as Nifty goes, let's see what happens. But this current month looks pretty good. So let's see, there'll be some good upside. Thank you. I'll see you in the next video.